All right, what's going on, everybody? If you can hear me, please drop a comment in the sidebar so I can get going here. But yeah, so today with non-farm payroll eve, typically a day where I do not do much of anything due to the sloppy nature. Turns out this is probably some of the sweetest, cleanest PA that we've gotten in a while. So I was very happy with my one trade of the day, and I proceeded to move on. You saw that reaction from Apple, which was pretty crazy. When we look at the chart, we can, I'll pull it up and we'll take a look at that. But I want to review today's PA because I think there's a lot you could take out of it. Also, we'll look through a few names specifically on the monthly time frame. We are doing this as a May outlook. That way we can see if there's going to be any names that we want to, kind of keep up with throughout the month. So if you would like this, whatever it's called, live feed X, and share it, and we'll get right into it. Cool, you guys hear me? All right, so let's do it. I'm going to share now, and we will get underway. So if you do have any names that you want to take a look at, feel free to throw them in the sidebar, and we will get to them at some point. But first, definitely want to make sure we get into the PA first. So I know I have to zoom in because if you're not watching on anything other than YouTube, it gets a little lame. But if we were to just take a look, this is obviously our end of day yesterday with the FOMC pump into a dump, right? So going into today, this is what we were working with following. So grind up overnight. Great. Nice to know. Now, if we were to go over here and just let me remove this for 1 second here. Obviously, we want to do this kind of in real time as best as we can. So for the look, and last night in our live session, you know that I kind of identified these as showtime imbalance. What does that mean? Well, if we don't have a clear-cut draw on liquidity, aka we don't have a clear direction in terms of where we think price is going at the moment, we can look towards these imbalances, specifically in discount of a bullish range or a bearish range, respectively, and expect some sort of price action movement to occur in when we get to those ranges, right? You will notice that we ticked around here quite a bit prior to that FOMC pump and dump, right? We got into our second showtime imbalance right here. And from that point, we started to grind overnight with a little bit of a gap, right? And you'll notice that the bodies of the candles respected, but we did end up taking out sell side right here. And from that point, I felt pretty good about it, right? So if we were to look at this from a bullish perspective, and again, I think it's fair either way that you were coming into today looking at, on a higher time frame bias perspective, right? I don't think it's as clear cut. I know last night I got into it, and I guess I'll briefly do it right now in terms of why I'm so torn in terms of direction from this point, right? Well, if we were to look at the monthly time frame, right? This would be our May candle, just the start of it. You'll notice that we got into that monthly bullish fair value gap right here. Now, I know it isn't in discount, so it's not the most ideal situation for someone like me who likes to get things in discount, right? But if we were to go back historically, and we did this last night, of course, but if you were to go back every single time that we touched one of these fair value gaps, whether we were in discount or in premium, we did get some sort of reaction to it, right? There's one, here's another, here's another, here's another right here, a little uglier, but here's another, here's another. So every time that we get into it, historically, we bounce, right? It's just how it is. And you can use previous price action and price data as a way to kind of drive us using that information. Now, I also, and this has been the game plan really since the start of the year, that I am waiting for a weekly bearish imbalance to form in order for me to feel like some sort of top is being put in, right? I know it's been a wicked run since October. Not discounting that at all. I know everybody is expecting major retracement at this point, and I think, I think still it might be just jumping the gun a little bit, and I'm fine with not being the guy to call the top. That's one thing that I want to make it very clear. I don't care if I call the top on a bullish run. I'd rather call the bottom on the bullish run like I did in October. And if you want to see that, just at MandoTrading, I like this low a lot, and you will see the tweet that I had posted on October. I think it was 26th, maybe. It was the weekend leading into this candle. So but it's a very different scenario. I know we went over it last night. I'm not going to harp on it now, but I have been waiting for a weekly bearish imbalance to form, right? And you'll notice that we did get one right here. But the fact that we have this weekly bearish imbalance basically inside what we already have currently set up as our monthly bullish fair value gap right here, extremely torn, right? I always tend to value the higher time frame in terms of what my overall bias is. I just think it's very unclear and very difficult at this exact moment. So if you went into this week or maybe even today specifically and said to yourself, I really don't know where price is going, and I'm going to have to just kind of play this, scalp this range, essentially, I think that'd be very fair for you to say. Now, you will notice in our most recent bullish price run, I think everybody can agree on that, we took out this high with this price run, the one that I currently have mapped out. Okay, you will notice that this is also getting into discount of a overarching or higher time frame bearish setup, high down to our low, and you'll notice we're making our way into discount of this specific bearish range, and this dates back all the way to mid-April, right? So it's really convoluted, and again, the market is very fractal. What does that mean? It means it's very time dependent. Everything is broken up into specific runs. So overall, historically, we have that bullish run on NASDAQ. We have a bullish run that we are still currently sitting in. That's even from October. But inside that, we do have bearish runs, and this is currently what we're sitting inside of. Our most recent run is still technically bullish until we take out the low that created that run over this high. This would be a market structure shift, and we did not get that today. By taking out this low, this is not a market structure shift. Why? We took out no swing high with that FOMC run. All that run was a run into a discount bearish imbalance. That's all it was, right? But by us taking out this low right here, that's essentially setting up our turtle soup move, which ultimately we get in a strong one in that, right? So following this morning session, and I'll go back over here just to map it out a little bit more for you. So now let's just go, and this is what I had going into today, and just to make it a little more clear. So you'll notice that we did have a couple of bearish fair value gaps along the way, right? From yesterday's, ultimately was a dump following that massive rip from 2 p.m. on. Now, if we were just to map this out, let me just map one. Okay, that's all we need. Okay, so you will notice that when price grinded up overnight, all good and all great, right? And let me just make sure I have sell side marked too as well. And there it is right here. Okay, so that is our swing low. Okay, if we were to look over here, map this sucker out, and I also want to just note that the kill zone strategy that I showed you guys or echoed to you guys was an absolutely gorgeous setup today, and it could have scored a ton of points off of it actually. So if we were to look, and let's just map out our London kill zone high and low. So ready, here is your London high. Whoops. Okay, great. Here is your London kill zone low. Okay, you will notice that our first initial move out of that kill zone, that specific time period, we made a run higher. Okay, you will also notice, where did we get into to reject, right? Bearish fair value gap. Great. So what do we do in terms of trading this setup, and how do we feel good about it moving into the New York session? Well, essentially, we're waiting for an imbalance to form when New York opens, right? At the very least. Specifically, I like to wait for 10 o'clock, but it happened a little bit before that today. So if you were to take a look, we will wait for that first imbalance to form and the first imbalance to be tested following the New York Open or kill zone creation, right? And here it is. Okay, there's your first imbalance, right off the kill zone high, gets up into this imbalance right here. There it is, ticks, dumps down for lows. Where does it go? London kill zone low, and even beyond that, I mean, that in itself right there, let's just say you added off the low of the imbalance, right? Just, maybe you didn't get the most perfect entry. Would you have gotten stopped out on this? No. Why? What's your stop out? The high of the candle that created the imbalance. There it is. Okay, so even with all of that, let's just say you got the low, right? For a minute, you were a little red, but you got the low of that imbalance right there. That's at 89. And just to be fair, we went down to 519. That would be a cool 70 points. 70 points on NASDAQ. That's one contract, $20 a point. that is $1,400 on that one move that took you a whopping 5, 10, 15, or I'm sorry, really 5, 10, there it is, 10 minutes. $1,400 in 10 minutes available for you right there using the London kill zone strategy. Okay, and you'll notice that we had that continuation type move. What is kind of the dead giveaway that we're actually going to continue lower and go seek sell side liquidity at that point? Well, when you get to a swing low or swing high, right, whatever time frame you're looking at, it doesn't matter. The reaction that I'm looking for, and you're going to laugh because it's so basic, but you're either going to go up through a low or you're either going to go down, right? Fair enough. So when we sweep liquidity, if we're to form an imbalance, meaning that would offer me insight that we're going to actually get a continuation move to the downside. Okay, here's your imbalance through previous sell side liquidity, right? That low, that swing low, that would be sell side liquidity. We got the continuation move down, and I'll show you the other instance where you're going to get the up move, right? Or turtle soup. So there's your continuation move down lower, another imbalance to the downside following, and we sweep the low, pre-data low on Wednesday, which is just deeper into discount of our hourly time frame. There she is. And now let's come on over back here, and you will notice after sweeping that low, right, this is quote unquote retail support, right? I'm sure there was so many people who saw that low get breached and they immediately started buying puts. And we know that if you understand the concept of liquidity, you're not going to fall for that trap. You're going to know that retail support is bogus, and unfortunately doesn't work all that well. But price sweeps the low, closes above, right? That's telling us that there's going to be, at the very least, some sort of discount retracement from our specific downward range, right? You will notice that we create another imbalance higher, and this is actually the trade that I took today, right here through a new day open gap. Here is the imbalance that I traded off of, okay? And was it a little spooky for a minute? Oh yeah, it was. So already you'll notice that we had our little run right here from low to our high. We got into this bullish fair value gap right here, okay? So entry being at some point inside. I posted the victory if you want the exact entry, but it was at some point within this 5-minute fair value gap. You'll notice that it got a little spooky, right? We ran down. Where was my stop loss? The low of the candle that created the imbalance, okay? Protected, imbalance holds, shreds higher, and ultimately nets me quite a bit, right? And you'll notice where I took my win, it was actually right here, right inside this bearish fair value gap. Why would I sell it off of that bearish fair value gap? Well, to be honest with you, Thursday, day before non-farm payroll, is typically a day that I'm not really trading all of that much. And last night, I know on the call I'm saying, yeah, there's probably less than 0 chance that I push any buttons. But after I noticed how clean that London kill zone trade delivered, I said to myself, this is a pretty solid setup. At the very least, I think we get into this discount bearish fair value gap at the very least. And ultimately we did. Wasn't not enough to give up the goose. And ultimately we continued higher from that point as well, noting that we had this bullish fair value gap here as well. And bodies are beautiful. But now, just to extend off that point as to why I typically don't trade that non-farm payroll, pre-non-farm payroll, so the Thursday before the first Friday of the month, is for this reason exactly. This could spook people out of trades real quick, right? Look at these low wicks, right? That is terrible in terms of where my entry was to where ultimately we reached down into, right? These sloppy wicks can give you a heart attack. They could stop you out of trades and then immediately rip face on you. And I've been a part of that on the wrong side of things quite a bit. And that's why I tend to avoid those days. So to me, this was, I was okay with the potential loss in this situation that I had identified here. But ultimately, I thought it was a pretty smooth setup. A little bit of a heart attack again here with these wicks. Notice how you see these low wicks like this. The market is not always like this, especially if you're studying price using these concepts. You will notice that we typically don't get these wicked wicks in either direction prior to making some pretty intense moves to the upside. But we continue to run higher. We take out buy side here, no problems at all, and we get that continuation type move, holding what would be a even higher discount retracement, right? And ultimately, what would our draw on liquidity be at this specific point in time? And really, the draw for me was here, that high at 17,793. Ultimately didn't get there in market hours, but you will notice that after making our way through buy side liquidity here, running up into this untouched bearish fair value gap, we get right up into the midpoint prior to rejecting one more time lower. And let's zoom in, and you're going to see, why did we bounce where we bounced, right off of this right here. Again, a little bit more of a sloppy move, but as expected on a non-farm payroll type day. There's your bullish fair value gap. There's your run higher. Here's another bullish fair value gap for this bounce right here. And there she blows. And she's gone, taking out buy side liquidity at 793. And so far, we're kind of just chilling out up there at the moment. So ironically, a day where I typically just completely avoid because of how sloppy the PA is. Again, it's the wicks that are doing the damage on these types of days. And there are a lot of times where, especially if you have a pretty big range, I might not be all that gung-ho about risking X amount of money on a specific trade opportunity. So, but that's currently, where we sit. Apple had a good reaction following that earnings report, in which I have zero idea if they beat, if they missed. I don't know. I don't care. None of it is relevant to me, to be completely honest with you. All I care about is price and what is painted on its chart right now. And we can get into that, of course. So with all of that being said, let me just come back over to the chat. Hello. And again, if you guys have any that you want to look at specifically, feel free to drop them. If not, I'm going to go through a few that I'm interested in for myself, and we'll leave it at that. So I saw somebody mention Bitcoin. We can take a look over here at Bitcoin first, but you will notice that if we were to march on over, we are currently sitting in a bullish trend. How would I identify this as a bullish trend? Well, what was the price run that we took out a high or a low, the most recent in our current situation that we have right here? And to me, we took out this high with this price run, low to high. I wouldn't necessarily use the entirety of that, right? We did get some sort of retracement here, and I like to use the immediate price run that does it, okay? If you didn't use the immediate price run on something like Carvana, I'll show you this as an example. You missed out on a banger, right? If you were to come over here and say, oh, well, this was the low, right? No discount retracement. But if you're using the immediate run that took out that high, low to high, discount retracement right into the monthly fair value gap, and ultimately rocket. So that's why I use the most immediate run. Again, everything that I'm saying here, if it doesn't make sense or you're kind of confused, feel free to comment. I will clear it up. Everything that I talk about always can be back tested on the chart. Everything that I'm saying can be justified. I'm not just speaking out of my you-know-what like a lot of these other people do. I'm saying everything that I do for a reason, because I can back it up using historical price data as a way to I guess back my claims, right? I don't just make assessments. I don't just call top because I think it's time for us to go down. That's ridiculous, right? I need some fabric behind that, right? And if that means that I'm a little late to the party, so be it. If you go back and look historically, every single time that we do set some sort of top, you get a second opportunity to get that short. After a lot of the people who initially went short probably took profits, you get that retracement into a bearish fair value gap and ultimately move down again. So everything, again, if you spend enough time on the charts, you will see there are a lot of recurring themes that happen, and that would just be one of them. But anyways, here's Bitcoin on your monthly time frame. First time we're retracing down into a monthly bullish fair value gap, and unlike SPY in particular, you will notice that we actually don't or we have not respected every month fair value gap, whether it was in discount or whether it was in premium, right? We could just look right off the top. Look at this monthly fair value gap from back in February 2021 that got smoked, right? Melted right through. Okay. And let's just take a look. And I'm just curious. Low to your high, discount retracement, bullish fair value gap, run for highs, Mando model complete. Okay, cool. So anyways, if we're to come back over here and look, we did respect this monthly fair value gap moving higher. We did respect this monthly fair value gap moving higher. Again, this is just a way for me to back test and just kind of, see how price reacts historically to these bullish fair value gaps. That way I have an idea of where I think price is going next. So one thing that I was keen on, and I know a few other people in the group were also watching this in particular, I think we all kind of just wanted to sweep these relative equal lows. One low being from that March 4th low, and the second one being from the April 15th low, getting into that weekly bullish fair value gap as well. We didn't quite get into discount of our most recent price run. Okay. And hold on, let me just confirm that. Yeah, no, we did not. So with that, the most ideal situation for me is to get it in discount, right? That makes much more sense in terms of risk reward, in terms of how I know price reacts to specific areas on the chart. Now, does this necessarily mean that we have to go down into discount? No, it doesn't. Why? If we were to take a look at this drawdown here over the last couple of weeks, you'll notice that we did not form one bearish fair value gap on the way down, not one bearish imbalance. So what is that telling me? That I'm not so sure the range is set. Okay. And if I don't really know that the range is set, then I can't with certainty say we're going to 56,000, right? I don't know. But we got into this bullish fair value gap, and so far a decent initial reaction. Of course, tomorrow with non-farm payroll, things can change quickly in either direction. And trading ahead of that, to me, I just feel like you're just rolling the dice a little bit and ultimately trying to outsmart a computer algorithm. So I tend to not try and do that. I'm not so sold. We don't just get to 56,150 and then from there start moving. And at that point, if we were to get into discount from here and not form any imbalance on the way down, to me, this could rip up like butter at some point. Again, timetable wise, we're looking at it from a weekly perspective. It could take time to do it, but there's not much resistance holding this back. And you do have relative equal highs right up here on the weekly, up towards that 73,794. So ultimately higher. Do we get to 56,150 first? Do we get to a deeper bullish imbalance here? I think less likely, but still a possibility nonetheless. Your next imbalance on the monthly time frame isn't until 37,628, and I really don't think it's going there without at least bouncing from this monthly first. So that's kind of my Bitcoin take at the moment. So all right. So hopefully that was a little insightful for you. Now, hold on. All right. Let's slide on over. What do we got cooking here? Yikes. Somebody just said, I tweeted out a little while ago. I said, what 3 companies will have the highest market cap in 5 years? DJT, GME, and CVNA. That was the answer. Okay. So, all right. Anyways, let's see. What else do we have? I see a few more that are in here. SMCI. All right, cool. Let's look at SMCI. So it did get into discount, right? Here is your discount. I know it gapped down to start the month, which is pretty damn ugly, but we gapped down. We're in discount so far. Pretty good initial reaction. So up until this point, 858. I think that is fair, right? Just from a monthly perspective, to at least kind of retrace the rest of that gap and see where we go from there. Do we go higher from that point? I still think that remains to be unseen. I think there's just way too many conflicting ideas throughout the market. Again, kind of like that NASDAQ breakdown that I'd given a little while ago. But let's go back over to the monthly and just the weekly, I'm sorry, and see. So ultimately, if you are bullish on SMCI, you really do not want to see it close below the open of last week down at 730. That would create a bearish order block. Would not be ideal. But at this point, currently, not all that bad. Again, very indecisive, but we did get into discount of our weekly range. And, above, all we have was the bearish weekly imbalance that we formed couple weeks back that we rejected from thus far. But other than that, we got nothing. A lot of clean highs up here that I think could be a draw. Now, to build off of SMCI, because it tends to move with the rest of the sector, you'll look at NVIDIA here, which looks much better. If you were to go to the daily on NVIDIA to get a little bit more immediate feedback, you'll notice that, believe it or not, my model completes on NVIDIA at 974. And here's just the way that I'm having it structured. So here's your low. Why am I using this low? We took out these highs here with that price run. You'll notice that we got no discount retracement here. So I got to go to the high that we have. We have relative equal highs on NVIDIA up here, 867 to 974. You do have a bearish imbalance. And what are these bearish imbalances telling you? That, okay, might be time for the range to be set, have us go back down into discount, which ultimately we do, getting down into this discount daily, bullish for value gap. And from there, it's been straight greens. You have a volume imbalance here, price gets into it, respects it. You have another volume imbalance here, price gets into it and respects it. Currently, bullish order block on the daily time frame. There is a bearish volume imbalance, which ultimately I don't believe is going to cause all of that much trouble due to the fact that we are currently operating in a bullish manner. You have relative equal highs at 907 as well. You have this bearish imbalance here that was already, we were chased into it already at this point. So I wouldn't really anticipate that causing much of an issue. And you got one more at this point here at 932. Other than that, pretty green. Ultimately, we have a bullish structure, so I don't anticipate these bearish imbalances doing much of anything other than slowing price down, to be honest with you. And now the biggest and the most disconnect I feel at the moment is that you're going to see some setups that I think I can justify pretty well that look pretty damn good, but Nasdaq setup in itself, it's really shaky, So that's currently where we're at. It just seems like there's a lot of things that are just not moving ultimately in the same way, which is kind of ironic. Oh gosh, yeah, Weeble guy, Weeble comment section. All right, so let's look at Starbucks here. That was our next one. So yeah, that's, I guess, my take on semis and SMCI. All right, so monthly perspective here on Starbucks. Yikes, you could see me throwing out that Starbucks cup, I mean. But yeah, looking at it from this perspective, we've taken out essentially every low that you can kind of book at this point. Monthly doesn't look all that great, to be honest. You have that monthly bullish for value up right here, but to be fair, and with this gap down, I should at least leave that open. So this ultimately, if we aren't to retrace back to where we dumped off from, this is going to be a pretty nasty bearish imbalance here on the monthly. Now, if we were to flip over and go to the weekly time frame, let's see. I think the weekly is going to look much better at this point currently. Yeah, it does. Okay, so ready? Here's your weekly. We are down in deep discount of this specific range, right? At this point, we're really not holding on to much of a bullish imbalance at this point. You do have a bullish order block here on the weekly, but that's about it. But ultimately, I still think structurally we're bullish. And yeah, I mean, it would take a lot to shift this up from this point here. Do we need to go see this low down here at 68, whatever, 68, 40-ish? I guess that's a possibility. I don't really see all that much here to catch it per se, other than this order block. But again, a possibility. Yeah, no, you know what? Starbucks has just been a name. Ultimately, I'm down on my shares, but the way that I operated with that was once I kicked the energy drinks, I just DCA'd, 20, $25 a week into it. So ultimately, I think over a long period of time, I'm going to be fine here. But that's Starbucks. Here's Home Depot. Very enticing. So you will notice that we have a bullish price run here. You have your discount retracement. We've been kind of chipping around in there for a little bit. Got our run back up into this untouched bearish weekly imbalance. one more retracement into discount of our more recent range from this low down up to that high. Here's your discount retracement. So far, so good. You do have an untouched imbalance down here, but I don't know. I don't really anticipate that happening. On the flip side, if we were to go to the weekly, you'll notice that a lot of the time as you move down in time frame, you're going to get additional information and more of a tighter window. And here's your weekly range set on Home Depot here from that low up to that high. We actually got into 50% and also filled this weekly volume imbalance higher. So ultimately, you do have a couple imbalances here, but if we are bullish, again, I don't really anticipate those doing much of anything except acting as a speed bump. If our drawn liquidity here is still that 396, you have no more imbalances to the upside after that 396 level. So you got a couple. You got one here and you got one here. Other than that, pretty smooth sailing on Home Depot. So that would be our next one. Let's see what else. Gap. All right, let's look at Gap on the monthly. Again, if you're watching, you like this stuff, you like when I do these streams here. Oh, it's GPS. Whoops. If you like when I do this, just share this, drop a like, just let me know. Because I don't do these that often. But all right, let me just zoom out a little bit and get a better idea of how we're currently operating. All right. All right, we'll go from a tighter little swing range here. So we took out this high right here with this price run, ultimately getting deep into discount on that lows back from 2022. Here is a volume imbalance, which ironically has held up decent. You have your turtle soup move right here off of these relative equal lows. There's the run, very solid. From this point here, you have this imbalance right here. What was the price run? And now let's zoom it in just a tad. Now the model in itself would complete there at 38, but we will look, that could be a much longer time frame trade. But if we look at it from the most immediate price run that we took out these highs with to ultimately create a bullish breaker, you have a low, high, lower low, breakthrough. We would anticipate the high of that sequence acting as a support level moving forward. And I need the rectangle, not the measurement there. Okay, so I'm marking this as black. That is my bullish breaker. So when price retraces into there, I would anticipate that acting as somewhat of a support level. So not quite discounted here on Gap just yet. We have another weekly imbalance down below. We have the breaker down even lower. Not really an ideal setup for me at the moment per se. If we were to retrace deeper down into here, I'd like it. Does that mean that it would be a genius idea to short something like this? I personally don't think so. I think that would be kind of playing with fire, knowing how close you are to discount of the range. And in addition to that, you're also looking inside a bullish structure, right? Structurally, we're bullish on multiple different time outlooks that you're looking at this, right? From our lows of COVID, we're still in a bullish trend. We're in a more immediate time frame bullish trend as well. So that's why if I see a big range and I start to see an imbalance form, like for example, if we were to come on over here and look at something like this might not even be the best example, but yeah, not really the most ideal situation, but we knew we had this imbalance here at the very least, okay? Right here. Notice how when price got into it the first time, it gave it a little bit of a bounce, right? Not all that much, but a little bit of a bounce nonetheless, enough to probably spook you out of your short. But once you see the first imbalance, you feel pretty good about price retracing into discount. Okay, that's great, right? There's your retracement into it, and then ultimately there's your move down, and you'll notice after getting down into that discount imbalance again, we did get a little bit of a bounce, but not the most ideal situation to try and short in my trading strategy when you're that close to discount of a bullish range. I think you're just playing with fire at that point. So when does it have earnings? May 30th. Oh, so a while. Okay. Yeah. I mean, at the very least, ideally, you'd see a little turtle soup action at 1834. That's my take, at least. You know, I could be wrong on this, but you know, you might see something different. But That's just where I'm looking. So that's gap. Now let's look at Ulta. All right, Ulta. Okay, oof. That's tough. Tough start to the month. Okay. So if you look at Ulta from the lows of COVID to the high that was set back in March of this year, you'll notice that we never got into discount on the monthly time frame and actually created a pretty nasty imbalance here in April, which is at the moment ripping apart not only a little bit of a fair value gap, but also a volume imbalance higher here. Ultimately, by the end of this month, you want to be making a pretty decent move back. When's earnings? May 30th. Yeah. At the very least, you'd want to see that close inside this previous bullish imbalance, right? We melted through it, which is kind of scary and sketchy at the moment, but not the most ideal. Let's look over here and just see. Yeah, we're flirting with disaster here on Ulta. So the way that I look at this here, we took out this price run, this low or that high with this price run. If you were to just go from this point to this point, you'll notice we didn't retrace into discount of the range, and with that, not something I'm interested in. I believe that the range was not fully constructed, and ultimately we took out this high here with that price run as well. Now at this point here, you got two little volume imbalances here left on Ulta, but ultimately could shift structure on the weekly time frame on a move down below that 368, which would be terrible. So there's, you're kind of running a little low on time here, and you'll notice that this imbalance here just got absolutely melted following taking out that new all-time high. So not really ideal for me at the moment, looking at it from this lens. You do have these, which are pretty low risk in terms of bounce areas, but pretty nasty. You now have 1, 2 pretty big imbalances overhead as well. And we did something called a balance price range, where you have an imbalance that was basically immediately erased using through another imbalance to the downside. So not only did it balance the range up, but it also had enough juice to melt through and create an imbalance to the other direction. Not ideal to me. So ultimately, I think this is probably the time where you see that retracement down into discount of this current range on Ulta. So that's what I got there. So let's see. What's next? Oh, was that guy's name Joe? Soul Vibes? I think it was. I got another guy. Can't wait to roast him when Mara shreds. That's the next guy that I'm going at. All right, let's look at Tesla. All right. So I got to tell you, with Tesla, it's not the most beautiful setup, along with a lot of these other big tech names. Where it sits on the weekly is not as bad, but you take a look. I guess we could justify this. And here's the post-stream assignment, I guess you could say. Every time we take out a higher time frame low, whether that's a monthly or a weekly, a swing low to be exact, every time we take out that low, I want you to go down, and if you don't have them on, turn on your volume bars. And oh wow, it's getting volume. I wonder why, right? Because it's already on the chart. And when we take out a swing low and liquidate those longs at a specific point, you're bringing money back into the market in order to drive price in the opposite direction. So that's my take on it. Back test it yourself. You'll be able to see it, and that's why you'll never catch me with those volume bars. It's lagging. You could see it before it happens. But anyways, if you were to look at Tesla, I'm thinking this is probably the most logical next place that we see 205.60. Now, with that's an untouched bearish monthly fair value gap, so could get a little sketch in that area. But just to be fair, following this sweep of liquidity here, we're still holding on to this bullish fair value gap all the way back from November of 2020. So not that bad. Here's a bullish order block as well that we're holding on to. So I think this is likely where we go. The way I look at it is, if we were to get above that 228 in a clean manner, I don't really see much that's holding us back at that point currently. This imbalance has been filled. This imbalance has been filled. Nothing up here spooks me at all. And that would actually complete my model on a yearly perspective too. But now let's go over to the weekly, and you'll see again, swept turtle soup, higher time frame liquidity. There it is. Boom. And so far so good. You're leaving that pretty large volume imbalance here. That's what it looks like going into well, we have one more day, so I guess this could be erased technically. You'd have to have a pretty ugly day on Tesla tomorrow to prevent a bullish volume imbalance from forming. You also swept that high right there with a low, high, lower low. So you'd anticipate this candle acting as a support level moving forward, and that's just essentially a way to structure your trade moving forward. But ultimately, yeah, so if we were to go take buy side up here, there, that's up at that 205.60, which lines up with your monthly bearish fair value gap right there. So I'm not a gambling man, but I think that's ultimately where we're headed next. And very similar situation. This imbalance has been filled. This is actually an untouched weekly imbalance right here, up to 234. You got another untouched here, but not as much as you would expect from that demolition that we had over the last couple. I shouldn't even say last couple, really, for the last 8-10 months at this point. Really, to me, a much more controlled demolition than what you would just think without looking at it, So that would be Tesla. Now let's see what else. Yeah, you got it. All right, let's look at Amazon. Amazon just a little bit tougher due to the fact that we are at, or really nearing, those all-time highs yet again. I think this is a similar situation where ultimately I think we go to those highs at 189.77, but it gets more difficult. So anytime you're looking at something that is just recently hit an all-time high, there's me getting my Amazon package. Anytime you get to something that has an all-time high, you no longer have price data at specific levels up here. So in that situation, I think targeting key levels is extremely difficult because price has never been there before, right? So you can't say, yeah, I think Tesla's going to 234. Like, where are you getting that number from? You have nothing previously, historically, that's telling you that that is a key point of interest, right? So it's just a guesstimating at that point. But I think at the moment, our current draw is that 189.77. We're going to have a monthly gap higher here to start, which is good for bulls. Now we can also look over here on the weekly and just see. So you'll notice that this is actually pretty bullish here. You have a bullish volume imbalance gap higher through a previous bearish fair value gap. That is really encouraging for those who are bullish on this name. Obviously, there's still one more day to go, and you have non-farm payroll, which could absolutely shift this up. But ultimately, if you are bullish, you really just don't want to see it close below 182.67 tomorrow. That would throw a wrench in things because this is technically at the moment still a bearish level, just based on us not actually closing above it just yet. But yeah, at that point, 189.77 I think is a fair enough draw. I don't really love these equal lows right here on Amazon down at 165, and I think there was one more set lower. Yeah, at 81. I don't really anticipate that happening, but maybe if everything goes to shit in the world, then you see that, but I don't think so. But yeah, so ultimately, if you're bullish, you want to see that close above the weekly bearish fair value gap there at 182.67. So could be saved by the bell tomorrow. The bulls also could get shot in the foot. There's a lot of setups like this where kind of need a pretty good day to remain bullish on some of these. So when NQ breaks out, is he gonna run? Yeah, I'm really torn still, to be honest. You got the weekly bearish fair value gap, but you have the monthly volume or fair value gap as well. I tend to lean towards the higher time frame when we look at stuff like that. So I guess, gun to my head, I gotta say I think we go higher again, but thankfully I don't have one to my head, so I don't have to make that hierarchy decision. But I'm kind of playing it setup by setup. And you'll notice that when I do end up sharing charts of mine and stuff, I really haven't been talking much about big tech names. Either they're all at all-time highs or not quite discounted yet where I feel good about them. They're kind of in no man's land on either direction, and that's why I really haven't been bringing them up all that much. There's a lot of mid-cap setups that look, or I shouldn't even say mid-cap / smaller large cap names that to me look much, really, really solid. D-Dog, yeah, for sure, Kale. Let's look at D-Dog. All right. So far so good on D-Dog. Let's just look from your low to your high. Okay, you had this one more little high before getting into discount. Beautifully done. Okay, you'll notice these are tricky. I'm just using this as a historical example. Did we get into discount? Yeah, we did, right? So was that satisfied? Yes. I find these hard to trade because we never get any significant close into them, but bullish imbalance, we tap discount and you get your run for highs. So ultimately that plays, right? So what was the run that set that new high? You will notice that we have a bearish market structure shift. Okay, great. So with that, we need to come on over here and look. There's your high down to your low. We are currently in discount of a bearish range. The tricky part on this is relatively new company. I know it's 5 years ago, but not all that much data in terms of our monthly time frame, and you don't have any bearish imbalances here. So this is really an important spot, in my opinion, for a company like this. There's a few names that look like this right now, where to me it's almost like, all right, we're going to give this company a couple years and we're going to see how it goes. If this company is garbage, ultimately I think it'll roll over, but you don't have any imbalance here per se on the monthly time frame. So this is a little tricky in terms of, or I guess this would fit the criteria perfectly on when I would not trade the Mando model, right? There's no imbalance here, so I have no interest in looking short, despite it being technically a bearish setup, right? We can also look at it from a much tighter window and look from a smaller time frame look, right? And again, you could still be wrong, right? I think it's okay to be wrong as long as it's controlled, right? So you have your low to your high. We took out these highs right here with that price run. Here's your discount retracement. Here's your bullish imbalance. There's your run for highs. So my model in that situation has been completed. Now, if we were to come back up here from our little run through this high, low to high, not quite discounted at this point, but there's no imbalance to the downside yet that would suggest lower prices, and here's a bullish volume imbalance that we're still holding on to. So at this point, just not much for me personally, right? I don't know. We don't have that imbalance to the downside that would suggest a retracement to 50%. And how high can we go in this current situation? It's a great question. I don't have any bearish imbalances to work on either. So it's kind of a little bit of a coin flip. Now, if we're to come over to the weekly, it's going to be quite similar here with your low to your high. There's your discount retracement, bullish fair value gap right there. Run for highs, beautiful. Okay. Similar situation where you have your low to your high. Okay. Ironically, that gap down created that bullish order block here, and not quite in discount yet either. So yeah, I don't know. I'm not feeling great either way on this. I'm kind of indifferent. So sorry, Kel. I don't have much for you here. Just I don't know. All right, Palantir. Let's look at Palantir. Yeah, Palantir. I'll do this one briefly because this Palantir lines up a lot with what I just talked about on Datadog. No imbalances up here while we are in discount of a bearish range. This is a bearish order block that we rejected, so fair. We got into discount of our monthly range, which is good and great. My model would complete at 27.50. Why am I not pounding the table right now on Palantir? Why did it have to leave these lows? We have relative equal lows here. I hate that. It's ugh. Why do I hate relative equal lows, right? A lot of people consider this double bottom. This does not make me feel comfortable whatsoever, knowing that if somebody had to have gone long at the low of this candle, 1368, right? It's the only thing that makes sense for price to get foot put right into the ground and move higher from this point. Somebody had to go long, right? And at the same time, you come back a couple weeks, what orders were protected? These same orders over here. We did not stop those people out. 1368. There's another equal low, right? So if people are pumping in here with liquidity, money, right? Orders driving price higher. They're doing the same here. You have double the amount of liquidity at this point down low, 1368. I don't necessarily believe that's where we're going. I have shares of Palantir, but I'm not actively trading it because this is just really, really sketchy to me. If you wanted to look at this from a really tight weekly perspective, we took out this high with this price run right here, low to high. You got your discount retracement into a bullish imbalance, so it's all good and great. I think you would, if you're bullish, you really want this to finish with an up close, or really anywhere above what's this candle's close. Hold on, 2036. That way you create a weekly bullish volume imbalance. That would be encouraging for bulls. But yeah, really torn, kind of indifferent on this one. If we were to come back down to 1368, I'd feel really good about, adding more shares there. But at the moment, I'm kind of just rotting it out, with what I currently have, because I do not like when lows are that perfect. It just seems like they're begging to get swept. So that's Palantir. Let's see what else. Zach, I did NVIDIA already, man. So you can go back in time on this and you can be able to see it. RTX, sure. Let's look at Raytheon. Lockheed Martin just completed my model. Similar. Is RTX not Raytheon? Yeah, no, it is, right? Yeah. I don't know why it doesn't say the name. Yeah, I think Raytheon's going to go to 106.03. Okay. Low, 2-year high, discount retracement, bullish imbalance. My model completes on Raytheon at 106.02. So I think that's where it's going. This is a monthly time frame. It could take a little bit of time to get there, but that's what I think. Yeah, you're dealing with a bearish weekly order block, but that's about it, and that's to complete a bullish price run. So again, speed bump. Has it been a speed bump? Oh yeah, it has. Ultimately, I don't think it's going to cause much of anything. Maybe a retracement into this fair value gap here down at 99.47. Otherwise, I think that would be like an ideal entry for me, with a stop loss below the low of the candle that created the imbalance. Even in this situation, he had a pretty big weekly range, but nonetheless, relative equal highs up here. So I think that's where Raytheon's gonna go. Might take some time though. Everything that I'm talking about here, it's higher time frame setup, so I feel confident about it. But ultimately, could take time for it to occur. I think Raytheon less time due to the multiple relative equal highs, but does it need that imbalance down below first? That's really the only question that I have. Let's see. Thought it looked interesting. Not trading it because I couldn't see any. Yeah, no, I don't know. That D-Dog it's just really convoluted. I mean, there is no bearish imbalance up there in discount, but yeah, I'm not so sold on that because it is technically bearish structurally. So would love to get Palantir. Yeah, Palantir. Yeah, no. So there's a bunch of names that I have in shares where I kind of just actively manage them, meaning I'll buy them in discount of a specific range, and I trim after taking out and completing my model, which I've been doing with Mara since yeah, it's been a while. There you go. Please tell me you see it. What was I telling you? what were you supposed to see at this point, man? Low, high, discount retracement, bullish imbalance, run for highs. That's from October 6th, so about $8 up to ultimately $31. But that's just essentially how I operate using the shares, where I like to snag them in discount and then look for profits up in this area. But I always kind of keep a not a large position, but a decent enough position where if it were to continue and run higher from that point, I'm still catching some gains. So I kind of actively manage a position, in companies that I like, and kind of run them that way. So, wow, 6% day. Yeah, I got some dude coming at me from there. This dude is bird brain, total bird brain. But all right. So I think that's what's up, protein? Yeah, so I think that's all I got for now. I'm going to call it quits. Maybe, just maybe, we'll do a live trading session on X. Well, tomorrow. We will have to see following that non-farm payroll. But yeah, so that's really all I got. So if anybody's got any questions about anything, feel free, and I will catch everybody next time.